Hello learners, welcome to the Thie Institute. Thank you for enrolling our course. In the previous video, we have learned what is stock market, how stock market work with an example. Today the agenda is what is IPO, what are the procedures, how the general public can invest in IPO. Let's begin. Let me see the full form of IPO, initial public offering. For the first time, the company is entering to the stock market. In other words, the company is providing the company's shares for the public at large. The purpose behind this may be the company will able to raise its funds for expansion of business or for repayment of debt or for the working capital. Working capital in sense the day-to-day business activities. We have learned what is IPO. Now we will learn how company will approach SEBI. Who is this SEBI? Security Exchange Board of India. We have heard RBI, which regulates commercial banks. In the same way, Security Exchange Board of India regulates security markets and sets the rules and regulations. SEBI will decide which company will enter into stock market with 10 different parameters. We learn basic 3 parameters in this video. The first parameter is the company should have minimum 3 crore of assets. The second parameter is the company should have filed IT returns without any losses. The third parameter is the company should not do any business directly or indirectly against the government laws. Part 2. Assets to shares. The company need to convert the assets in a form of shares. We have a formula. The shares is equal to assets divided by face value. What is the face value? Face value is a base value of the company. As per the SEBI guidelines, the face value is rupees 10. For example, the assets of the company is of rupees 1 lakh. Divided by the face value is rupees 10, it comes around 10,000 shares. Only 30% of these shares are published under IPO, remaining 70% are published under FPO and QIPs. Part 3. Fixing of share price and types of investors. Everybody thinks that face value is the share price, but that is not the case. The face value is as per the SEBI guidelines. Based on the demand, the share price are decided. For example, if you purchased a pen for rupees 10, the manufacturing cost of the pen will not be 10, it will comes around 2 rupees or 3 rupees or even 5 rupees. The same way, the company shares are decided on the demand of the investors. If the investors are willing to pay the company shares at rupees 100, then the share price will be decided at rupees 100. Who will decide the share price? Here in this, the investor. The company will conduct the meetings before the IPO launch to the investor. There the discussion will be how much the company is expecting to raise its funds to the public and how much the investor is willing to pay for the company. On a final discussion, the company fixes the share price. We have categorized these investors into 3 types. One is institutional investor, second is HNI, high net worth individual, third is retail investors. The institutional investors are like commercial banks, mutual funds, asset management company, wealth management company, etc. High net worth individuals are the individuals who are ready to invest in the company for more than 1 crore. And the retail investor, the individual who are ready to invest in the company share for more than 5 lakhs. In part 4, we learn how to participate in IPO and its procedure. The company will fix the launch date. Before the launch date, the investor apply for the shares. The investor will not able to buy 1 or 2 shares. Instead, the company will decide the shares on a lot size. What is this lot size? The lot size is called as bunch of shares or bulk of shares. The company will decide this lot size based on demand. For example, the company can decide 1 lot is equal to 10 shares or 1 lot is equal to 100 shares. Based on company's lot size, the investor has to buy the shares. If you are ready to accept this lot size, then you have to approach your broker. The broker will guide you on purchase of IPO shares. Once the launch date is completed, the company will allocate these shares to the investors. If the investors has got the shares will be created on the demat account or else the funds will be refunded. Till now we have learned what is IPO, the structure of IPO, how the general public can participate. You have two questions, that is where the shares, the IPO shares go, and second is the rejected shares for the investors, how the rejected investors can apply. These two questions will be answered by the one, that is secondary market. In next video we learn the detail of secondary market. Until then, stay tuned. Thank you friends.